Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, US stocks finished sharply lower to close out global market rout, as well as that US economy is not in recession, says senior Fed official. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is obviously to do with US stocks and their issues at the moment. Now, of course, the US stock market dropped significantly over the course of Monday following a sudden wave of market pessimism added to by Japan suffering their worst day in markets in 37 years. Now, this comes as the well-known S&P 500 has dropped a full 3% in its sharpest one-day drop since September 2022. And the Nasdaq also dropping 3.4%. So obviously, as I've just stated there, a massive sell-off is taking place with US stocks at the moment. It does seem like, as well, obviously in Japan we're seeing the same sort of thing. And of course, we've been covering the US stock market when we can, but mainly we focus on the Fed's monetary policy, and then I kind of leave it up to you guys to kind of analyze the US stock market yourselves. Apart from, of course, the time that we're on the charts at the end when we do go through those kind of key stock indexes such as the Dow Jones and sometimes the S&P 500 and even the Nasdaq. And obviously over the past few months we've just seen a continued rally to the upside for these key US indices, and this has kind of been despite some very hawkish rhetoric from the Fed. So really we've kind of seen a very positive response despite kind of poor market conditions, and arguably that's because whilst the Fed has kept interest rates high, at the same time the US economy has remained strong, and as a result many have just kind of stayed strong with the US economy. Many have still trusted in those kind of key tech leaders, including the likes of obviously Nvidia and others within the kind of AI space, which have actually been really pushing the markets to the upside despite the kind of poor market conditions. As if we compare something like the S&P 500 and the Dow Jones, with the Dow Jones we haven't seen much movement to the upside over the past few months because of the poor macroeconomic conditions regarding the Fed's monetary policy. Whereas for the S&P 500, because it has such a focus on some very few very powerful tech stocks such as Nvidia, ultimately that index has been able to rise to the upside in quite a significant fashion in comparison to what, as I said, we've seen with the Dow Jones. So that's kind of what we've seen so far for US stocks. Now, moving to the Japanese stock market, we don't usually follow the Japanese stock market regarding their key indexes and that kind of thing, but ultimately we look at the yen, the Japanese yen, a great deal on this channel because it forms a very interesting and very nice pair with the pound. Pound yen is kind of one of those key forex pairs that we're always covering on this channel, and is kind of a key topic on the chart section of these morning market briefings. And obviously for pound yen, we've seen a massive rally to the upside over the past few months, as ultimately the yen has just massively weakened and the pound stayed where it is. And as a result, we've just seen this skyrocket for pound yen to the point where, of course, £1 could acquire over 200 yens, and ultimately that was kind of a very significant period for the yen, as it was kind of breaking multi-decade highs, and as a result many were starting to question when the Bank of Japan would kind of intervene and try and sort out the yen basically and try and fix it as they've tried before, and ultimately seemingly that day came, and as a result we've now seen this massive sell-off for pound yen, as of course the Bank of Japan has now implemented a new kind of method to deal with the kind of currency devaluation, and as a result now pound yen has absolutely dropped off the face of the earth, and I believe is now within the 180 territory, which is far below, of course, the kind of levels above 200 that we were talking about a few days ago. So we have massive volatility in the market, obviously, and we're also in a period of political instability, Obviously, within the Middle East, we're facing multiple wars on multiple fronts, and then obviously we're also facing wars in Europe, which are still affecting, supply chains and obviously oil and gas prices. And then add to that your number of elections that we've had over the kind of period of the past few months within Europe, and then also we have, of course, the US presidential election coming up very soon in November. And as a result, I think the markets are kind of dealing with this very severe period of volatility, and as a result, struggling somewhat. And this is kind of why we're now able to see such massive sell-offs play out within the markets. So definitely keep your eyes on US stocks, but we'll get into this article straight away. With more than 95% of the stocks within the S&P 500 suffering a bad day. This was the tech stocks which drove most of the stock rallies early in the year, which caused the greatest hit to the stock index, with the now famous tech stock Nvidia having fallen as much as 15% during early day trading, before then closing down a full 6%. That said, market conditions by the end of the day were far better than what they had been earlier in the day, and the VIX index ended at 38 on the day, which was down, from 65 during the morning hours of Monday. Markets had been on an up and up for the majority of this year so far, but ultimately markets have begun to fall following new fears that the Fed may have been too slow to respond to the signs that the US economy was weakening. Many are now worried that the Fed will now have to play a serious game of catch-up with rate cut after rate cut in order to make sure the US economy is not going to suffer badly. So that's the kind of key issue that's obviously facing the US stock market at the open. That's the key issue facing the US stock market at the open. The question will be, of course, whether the Fed can settle those fears, and whether then the markets can kind of level out, peter out for some time, to allow the Fed to kind of almost make those key and important decisions. But obviously we'll keep you updated, and once again this all comes back down to the kind of thing that we're always talking about on this channel, which is of course the kind of macroeconomic perspective, and now that's kind of as we said, playing out. So this is why maybe the macroeconomic perspective isn't going to play out on the day-to-day, but every now and then it'll come around and it will have a massive impact on the market. So that's all to talk about on this article, though. Next article to talk about is to do with the Fed. So we're still kind of on the same topic, but now we're kind of applying some context regarding the Fed and how they're hoping to possibly settle those fears regarding a potential recession, and how that's then of course affecting markets. Now, a very senior Fed official just attempted to speak markets back into a period of peace following traders fearing that the Fed has been too slow to cut interest rates. This came as the Fed official said that the central bank would move to fix any deterioration in the economy, and added that they believed that they were not in a recession. So as we just heard in the last article, many traders are fearing that we're kind of the US economy is now moving into a recession, or is already kind of in one, as the Fed has been too slow to cut interest rates. As of course we've spoken about this many times on the channel, but ultimately the Fed is kind of, whilst at the start of the year it was seemingly going to be the central bank that was going to cut interest rates possibly first, now we're kind of looking at the Fed as the central bank that will cut interest rates last out of these kind of key Western central banks. As of course the ECB has now cut interest rates for the first time, and so is the Bank of England. And the Bank of England was expected to cut interest rates the last out of all of those kind of key central banks, with the Fed originally being expected to cut interest rates as early as March. And obviously we're far past that now, and we're now looking at the Fed possibly cutting interest rates in September, but that's still not a guaranteed position from the Fed. So ultimately we're in this very tricky situation where it seems like the Fed are dealing with inflation, which is still stubborn within the economy. We still know that inflation is around that kind of 3% level, far from the 2% target. And ultimately, we also know that services inflation is far higher than that. So, kind of underlying inflation is still there. And, interest rates are at their kind of all-time highs or multi-decade highs, which is now seemingly hurting the economy, as for the past 2 years, the Fed's really got away with having really high interest rates and the US economy not being affected that much. As we've spoken about many times on the channel, the US economy has really been an outlier, regarding the kind of global economy. And as a result, the Fed is now kind of faced with this really tricky position where they are now starting to face slowing growth and a weakening jobs market, and they are also facing stubborn inflation. And now they're in a position where they're going to have to cut interest rates if they're going to kind of save the market, if they're going to kind of save the economy, really. So it is kind of a tricky situation for the Fed. But as we can see here, a key Fed official is just trying to calm the nerves, which is kind of understandable, but it's a question of whether those kind of promises can actually be played out in the correct fashion. Now, markets over the course of Monday experienced a global sell-off in equities, which saw markets rattled and also triggered new expectations that the Fed would need to cut interest rates in a very aggressive manner. Jobs data from the US worsened such fears after the figures came out in a worse than expected way, and as a result added to fears of a sharp slowdown in the US economy. Last week, the Fed also made the controversial decision of keeping interest rates between 5.25% and 5.5%. That said, they also did signal that their first interest rate cut could be taking place in September. Following the latest worrying jobs data and the market reaction, the Fed may cut rates in a far more aggressive way than previously expected, but we will obviously have to wait and see, as anything can happen, as we all do know on this channel. That's all to talk about on this article, though, and the articles as a whole. Next to talk about, like always, is of course the charts, where some interesting things are playing out, with the US 30 kind of bouncing off those lows which were made over the course of Monday. So over the course of Monday, we just saw this dramatic sell-off to the downside, which saw price fall from the levels which price had already fallen from on Friday. So this was kind of a continued sell-off for the Dow Jones after what we had seen on Friday with the weakening jobs data, and we just saw that continue to play out on Monday. Now, over the course of Monday, though, we did end off kind of with this bounce back to the upside. So around, between the kind of 1 o'clock to 3 o'clock in the UK, we did see kind of price bounce back off those lower levels, and now we have seen kind of price retrace somewhat to the upside. I think it is kind of important, though, when we're seeing such massive moves, to kind of contextualize the volatility, as if we were kind of looking at this period within the market, as you saw there, I would kind of extend it to look at those kind of different price levels as we are on the 4 hour here. So you can kind of see this kind of market playing out just on these lower time frames. But then if you move into these, the period of price action that's far more recent that we're talking about at the moment, you can just see how much more volatility is within the market, with these massive candles to the upside, and really no kind of sideways movement for the charts, and instead just up and down, up and down. And as a result, we're now down and around those levels that we haven't seen since the 19th of June. So all of that kind of bullish swing that we saw to the upside has now been reclaimed by the Dow Jones, and the same can kind of be said for the S&P 500, if we can load that up, which sold off in a far more significant fashion and sold off to levels not seen since May, the 6th of May. But obviously we bounced off those lows, as I've already stated, but still we're around those kind of lower levels. So it's a question of whether we'll continue this sell-off to the downside, or are we now going to kind of peter out, level out, and possibly then start this move back again to the upside. So we'll have to wait and see, but definitely keep your eyes on both the Dow Jones, the Nasdaq, and of course the S&P 500. Next to talk about, though, is the dollar, which is an interesting one to talk about, obviously, as at the moment we're talking about the Fed potentially needing to cut interest rates far more aggressively than previously expected, and that's kind of being played out now on the market. So as you can see here, when that jobs data came out in the US, which showed, of course, that the US economy was weakening, many then started to kind of preemptively think, okay, the Fed's going to have to cut interest rates in a far more aggressive manner now. As a result, the dollar sold off, because that's the dollar losing value, because it's not going to gain as much kind of money through gain as much interest just through the kind of benchmark rate. As a result, we saw this massive sell-off to the downside. Now, price did bounce off those kind of lower levels, though, on Monday, around that kind of 102.23 level. So that was the kind of bottom for the dollar. But when price did find that bottom, it was touching levels not seen since January. So if we kind of zoom out here, you can kind of see how significant a sell-off that move really was, and it broke below that kind of the very bottom of the market, and has created this new bottom in the market. And the question is, just like previously, will we see this kind of will we see a continued sell-off? Will we see a continued sell-off, or in fact, are we now going to kind of bottom out? We're going to possibly even retrace back to the upside, or what's going to happen here? As we do kind of have those higher levels, which price could make its way back up to before continuing to sell off to the downside. If we draw out a Fibonacci retracement tool right here, possibly that can help us contextualize things, as that 6180 is kind of near and around that liquidity level, so possibly price could react to that. But if I also bring up the 50 quickly here, we are kind of nearing that level as well at the moment. So we could see anything play out now on the dollar, but definitely keep your eyes glued to your screens, as some interesting things are going to be playing out, with the Fed being faced with some very important decisions. Next to talk about is Euro USD, which has kind of retraced after the kind of upswing that we saw over the course of Friday and then Monday. So midway through Monday, it did seem like price was realized, price started to the Euro USD started to price in the fact that possibly we weren't heading into a recession as much as many were previously expecting for the US economy and anticipating, and as a result we kind of saw this retracement. But just as I said with the dollar, it is a kind of question of whether this retracement is price moving back into this kind of period of consolidation, or is it just kind of retracing to gain the momentum to continue this move higher? And obviously this week will be kind of answer that for us. Over the course of this week we'll kind of find out. So definitely keep your eyes on Euro USD, but currently price is at kind of no key kind of levels to note. That's what's about on Euro USD. Next to talk about is pound yen, which has sold off massively to the downside, obviously, over the past month or so. Ever since the start of July, really, we kind of started to reverse. And as a result, we've now seen price sell off from the kind of 208 level, as I said earlier, to now all the way down to the 180 level. That's how significant a sell-off we've seen. And, the fact that when I kind of zoom out to kind of contextualize this massive sell-off, you can't even make out the kind of individual candlesticks. It's that much volatility. And that's, the market losing 13.5% of its entire market value. That's how large of a sell-off we saw for pound yen, and it saw price kind of retrace and reclaim all of the gains made since the very start of this year. So an entire 8-month period of kind of continued bullish rally was completely taken out in one bearish swing. That's how significant a move this kind of sell-off was. Now, price did bounce off those lower levels, though, as I've previously stated, over the course of Monday, as seemingly the entire markets, whether it was the dollar, the US indices, or pound yen, all of them kind of retraced on those massive sell-offs that we did see. And as a result, now price has kind of leveled out somewhat around the 184 level. So we'll see what does happen. Keep your eyes on pound yen. Next about is Bitcoin, which also saw a massive crash following the kind of worries entering the economy regarding a potential recession. So we saw a massive sell-off as a result of that, which is kind of contrary to what many would expect when we start to hear about, the Fed cutting interest rates. Many would think, okay, maybe the dollar would do kind of all right, or the pound, or Bitcoin would do all right in that kind of period where people take their money out the dollar, maybe put it in Bitcoin. But we haven't seen that, because ultimately many are now fearing a recession, and as a result, they're just taking their money out of everything, as they're kind of worried for their kind of financial solvency instead. And that's why we have seen this massive sell-off, it does seem like. At the same time, though, whilst we did see a massive sell-off with price bottoming out around that $50,000 a Bitcoin level, ultimately price is still holding above the $54,000 a Bitcoin level, which is where price kind of came down to on Friday, the 5th of July. So really, whilst we have seen a massive sell-off take place, price is still, now holding just above the kind of very bottom of the market that was formed not too long ago. So, definitely keep your eyes on Bitcoin. It's very interesting to see how, despite all these kind of worrying news, price, the price of Bitcoin is still staying at these very high levels if you actually kind of think about it. That's all to talk about on Bitcoin though. Next about is gold, which at the moment is kind of retracing to the downside after kind of selling off over the course of Monday, then bouncing back again to the upside, and now it's seemingly kind of on the downswing once again. But we'll have to wait and see what does happen for gold at the moment, as price is around that kind of key liquidity zone. Lastly, to talk about though is oil, which has dropped even lower over the course of Friday and Monday, but at the moment is kind of ranging and consolidating almost at those lows. So we'll see what does happen for oil, as of course tensions in the Middle East at the moment are very high. That's all to talk about on oil though, and that's all to talk about on the charts. Lastly, to talk about, like always, is of course the economic calendar, where some interesting things are of course playing out. But because I'm recording this video late, I apologize for that. We have already received basically every piece of data that we need to talk about. So first, we received the British retail sales data, which came out at the kind of forecasted level. Then we got the Aussie interest rate decision, which saw the RBA keep interest rates at their current level. And followed by that, we received the Swiss unemployment rate figure, which came in at 2.3%, the same as previous. And then we got the retail sales figure for Switzerland also, which came in at a negative 2.2%. Followed by that, we received the Eurozone's retail sales figure, which also came in at a negative 0.3%. And then followed by that, we received the Canadian balance of trade figure, which came in at 0.64 billion. And then followed by that, we received the US balance of trade figure, which came in at a negative 73.1 billion. So lots to kind of note there on the economic calendar, but all of it's already come out, so not too much to forecast there. But we've got lots in the articles, lots in the charts, and lots in the economic calendar. Once again, sorry for uploading this late, but at least we got it out. But that's all from us at Wildwood Capital. Have a great trading day. See you later.